what we have here, breakout blocks, it is a failed order block where institutional orders are trapped, leading to a shift in market structure and a change in the role of that zone, that is from support to resistance or vice versa. So from my illustration here, you can see that we got a breakout structure here. So following the order block strategy, all we need would just be for price to come to this particular order block, tap in, push to the upside. Same thing with that of the bearish order block, for price to tap in, push to the downside. But then if price should come to that order block and break it, more like giving a change of character or further breakout structures, that simply means the order block has failed. And now price coming to retest that failed order block is now what we call breaker block. You can also call it, break and retest. But then there are some, confluences you need to see present before you can decide to take trades from that type of point. It's not just about break and retest. So once price, pierces through an order block, that simply means the order block is no longer valid, and price returning back into that order block, that is what we call breaker block. And I'm going to show you guys how to actually catch good entries using this particular trading model. So just keep watching. Let's get to know the importance of breaker blocks. Why is breaker block important? A breaker block is very important in smart money concept trading because it helps traders understand where the market has switched direction. So you can also see from this illustration, once we get that failed order block, once price pierces through an order block, you position that order block. All you just need to do is map it out, waiting for price to come back into that zone, and then you take your entry. It shows that the market has changed direction. And remember, once price clears, a valid order block to the downside, that signals a change of character. And most of the times price can just come, retest the failed order block, and keep pushing to the downside. So that is very important to note. Same thing is applicable to that of the bearish structure. Price piercing through a valid order block, and then you map out the failed order block as the breaker block. You wait for price to come into that zone, and then you push it to the upside. Remember, you don't just trade it blindly. There are some confirmations, there are some confluences you need to see present, which I'll show you guys on the next slide. So let's go through the different confluences you need to see present, to map out a valid breaker block. So the first one here, an order block must do what? Fail. A breaker block only makes sense if there was a valid bullish or bearish order block that fails. Example, a bullish order block that price was expected to respect, but instead got broken, just like what we have here. So you can see that we have a breakout structure. Now, if we are trying to trade off an order block, mapping out the order block that caused this breakout structure, you can see what price did. Price came, tapped into the order block, and pierced through it without it playing out. So that simply means this order block has failed. All we need to do now is to look for valid points to map out the breaker block, and the breaker block will be the failed order block, but in a way that price will come to do what? Retest. So for the next one, which is number 2, the structure must break. It can either be a breakout structure or a change of character. So after the order block fails, price should break market structure in the opposite direction. This confirms the smart money has shifted order flow. So once price clears that particular order block, make sure it's not trying to go and tap into another order block below or above before you will now, be cleared out as liquidity. Make sure that price is dishing out either a change of character or a valid breakout structure before you can consider an order block as failed. So most of the times I prefer when it is giving me a change of trend, giving that valid change of character. Then you can now map it out and wait for price to correct into it, and then you drop it. Because don't try to map out a breaker block when price is just trying to clear liquidity to tap into a more valid order block that is below. So have that in mind. Make sure that there is a clean break to the downside, signaling a change of character or a break of structure before you can say that an order block has failed. For the next on the list, there must be a retest and mitigation. After the break, price should come back to retest the broken order block. Now a breaker block. The breaker block becomes the new point of interest for possible entry. So watch as price is returning back into the broken order block. Wait for that rejection to happen. You can go aggressive, you can also wait for the confirmation, but then wait for that rejection to happen to be sure that price is ready to react from there and give you your preferred direction. So don't just jump in, because sometimes it may just clear it and keep pushing, and that happens when price will just clear liquidity, tap into the right order block, and then you may be thinking there's a failed order block and price will just keep moving. So you just need to play smart with this. I'll show you guys the entry. Still on retest and mitigation, when you are trying to catch a trade using breaker blocks, make sure you are working with the discounts and the premium zones. So in a bullish scenario, the breaker block should be in a discount zone. Discount zone here simply means cheap area for a buy, and then in a bearish scenario it should be in a premium zone, and premium zone here means expensive area for a sell. So this adds extra confirmation for entries. You can see this one now is a bearish scenario. Price has gotten towards a premium zone, so an expensive area for a sell. So price has been tilting to the upside and then finally dished out a clear change of character, which simply means that the market has changed trend. So that is when it is most likely going to play out, because if you're trying to catch it when the trend is still very strong, no strong change of character, price is just tilting to the upside or to the downside, then you may just get stopped out because there is no clear change in the market structure. So make sure you are catching it at the discount zone or the premium zone. So the next we have on the list is the entry placement. Very, very important. Most of you may just try to tighten your stop loss and the rest, but watch how you place your entries. Now, have it in mind that you can go aggressive or you can work with confirmation. Now, for the stop loss, place it above or below the breaker block with some breathing space. Now from here, I always consider the last week rejection after the break, just like what I do if I'm trying to take my trades from order blocks. So look out for the last week rejection and put your stop loss a little bit above or below if it is a buy. I'll still show you guys a buy example. And then for the take profit, the take profit should be at the point of reversal. Be very realistic with your trade and watch the markets play out in your favor. Let me show you guys a buy example. This is an example for a buy. Now you can still go aggressive or work with confirmation for the entry placement. Now you can see where price failed here. That is where this order block failed after dishing out a very clean break of structure. Now price coming there, you can see there's a little accumulation, then after that price cleared it to the upside, giving a change of character or a break of structure. Now you can see what price did. Price came, tested it, which is now a breaker block. You can see it's breaker block retest and now push to your direction. So this is just how you need to approach it. You need to be very careful and understand when an order block has failed and how to actually take your entry. And before taking your entry, I will advise that of confirmation. Make sure that price is indeed respecting that point. Most of the times price may just give you a little consolidation around the order block before it will break. That is, more likely to play out than when price will just clear to the upside or to the downside and it's coming to retest. So always work with confirmation when you are trying to take your trades using breakout blocks. And remember, for your stop loss, above or below the breakout block with somewhat breathing space. So here, just a little bit. I always look out for the weak rejection before the break, just a little bit below or above the weak rejection. So that is how you can catch smart entries using breakout blocks.